So let us understand this by using the example of Paytm. So when Paytm's stock got listed, before the stock getting listed, the private investors had a lot of useful information, and after the stock got listed on the exchanges. Hi everyone, welcome to today's video. So many of you who might be watching my videos regularly would know that I am an entrepreneur. I love building new businesses, and more specifically, I build digital businesses. I had done a separate video where I have spoken about my 17 different income streams, so you can watch it to learn more about my background as an entrepreneur. Additionally, I am also an angel investor, so I invest in a range of different startups, and this year itself I have invested in close to 10 startups. Now the reason why I am telling you this backdrop is fairly simple, that one of the startups in which I have invested, it is called as Wind Wealth. It got a lot of coverage in the media recently, and my investment in that startup grew to 5x within a few months. Now, I might say that, you know what, startup investing is probably the best investment bet out there, and the retail investor should jump aboard. And there are a ton of startups that are democratizing and making things easy for retail investors to invest directly in unlisted companies. So that is the conversation that we will have today. One, that whether retail investors should invest in startups. And two, if you are looking to invest, then what are some of the key things that you need to keep in mind? What are the pros and cons that you need to understand? So we will develop that holistic understanding through this brief video. So let us first and foremost understand the pros and cons of investing in unlisted companies. Now, when I say unlisted companies, so listed companies, you can go directly invest through NSE, BSE and purchase stocks like Hindustan Unilever, ITC, and bunch of different new age startups also. For example, Paytm and Zomato launched its IPO, and you as a retail investor can go and invest. So these are listed companies, very easy to follow and invest in these companies. On the flip side, unlisted companies means that these companies have not been listed on NSE, BSE yet in India. But you see great potential. Now should you go and invest? So let us start with the con story first, and let us look at the negatives first. So there are 4 specific negatives that I can think of. So the first is loss of capital, because startup investing is risky. Just to help you understand the context here, so when VCs, venture capitalists or angel investors invest in startups, they go and invest in 100 companies and probably 5 succeed. But those 5 companies give so much return that it offsets the loss by the other 95 companies. But you as a retail investor might only make 1 or 2 investments, so you need to be a little bit more picky in terms of the type of startups that you need to invest. And this is definitely a risky game, and there can be complete loss of capital also. The second risk is called as the liquidation risk. For example, if you go and invest 5,000 rupees in any startup. Now your obvious question would be that, Akshat, how can I invest like just 5,000 rupees in a startup? You can, and I will tell you how, but back to the cons. So the liquidation can become a problem. So liquidation simply means that you put in your 5,000 rupees, but you're not able to sell off your stocks that you have purchased in that company, because there is no free market per se where you can go and sell your stocks in these unlisted companies. So the liquidation risk is again very high, that the liquidity in terms of passing on your stocks to someone else is not that easy. The third risk is the dividend risk, that when you invest in these private companies, they might or might not give you dividends. So your money might get stuck for a very long period of time. Fourth and final risk is called as the performance assessment risk. So performance assessment simply means that, for example, if you put in your money in HUL or Tata Motors or a bunch of other listed companies, they come out with a lot of commentary, the news media covers a lot. So you get relevant information on which you can act. For example, if the growth of the company is not that great, you can decide to sell off your stocks in these listed companies. But with these unlisted companies, it is not that easy to get access to quality information. So the transparency is not that high. So now you will say, Akshat, you have given me like such bad news. Then what is even the point in terms of looking at these companies? Okay, so let me tell you some good points about investing in startups. There are 3 specific pros that I will mention. Of course, there will be many more, but these are my top 3 points. Now, the first is the concept of asymmetric risk. Now, asymmetric risk in simple terms means that if you go and invest 5,000 rupees in a startup, it might go to 100x in a very short span of time. That 100x returns usually happens in cryptos or startups. So this asymmetric risk concept, that you are taking huge risk, but there's potential to make very high returns as well. So this is the first advantage if you are looking to put little bit of money in these asymmetric type of investment instruments instruments, then yes, startup investing might make a lot of sense for you. Second key thing is that you get a slightly more level playing field. Now, what do I mean by this? So let us understand this by using the example of Paytm. So when Paytm's stock got listed, before the stock getting listed, the private investors had a lot of useful information, and after the stock got listed on the exchanges, these early investors took exit, and that is one of the reasons why Paytm stock has fallen so much. So this type of scenario generally does not play out in early startup game because everyone is investing at that stage, and the investors usually get the best exit when a company IPOs. So let me help you understand this point slightly more graphically. So usually what happens is that there is a seed round and investors enter here. Then there is Series A, Series B, Series C. So all these different rounds, the valuation of the company goes up. And majority of these investors exit or make the most money when a company IPOs. So if you as a retail investor get an opportunity to invest in a pre-IPO stage company, then there is more level playing field there. Third and finally, the biggest pro that I see in terms of startup investing is that startup sectors right now is a sunrise sector. It is literally bringing a cultural shift. There are TV shows that are being designed. Government is supporting startups. People are getting super excited in terms of starting their companies. They are learning more about entrepreneurship. A lot of money is flowing into this sector. So therefore, if you invest in something where the growth potential is very clearly visible, then of course the potential returns can also manifold. So the word of the day today is manifold. So let me know, what does that mean? So now you'll say, Akshat, okay, fine. I understand the fact that there are a lot of risks involved also, benefits also. So I'm looking to take a little bit of position in investing in startups directly, but I don't have a lot of money. So is there a way that I can go and invest in startups as a small retail investor? I cannot put in like 1 crore, 2 crore, 10 crore. I just want to invest a little bit of money. Is there a way I can do it? Now, there are multiple platforms that you can use. I will show you one. And you can pick any platform that you like. This is not a sponsored video. Okay, so let me show you one of the platforms. And again, please keep the focus of this video into investing in startups. You can go and pick whichever platform you like. That is not a problem. So just for illustration purpose, I am showing you one of the good platforms. So the platform is called as Tyke, and it allows retail investors to directly invest in startups in which they are interested in investing. So if you simply go on Tyke's platform, you will see a bunch of these listed companies. So you can scout through this and pick up startup ideas that make sense for you. So for example, right now I only invest in fintech and edtech companies only. Why? Because this is a space that I understand. So I will go and scout for a fintech or an edtech idea. So this startup looks interesting to me. So I will just literally click here and I will get more information about the startup. So this is the pitch and this is called as the pitch deck. Now let me just quickly break down some of the key points for you to understand. So first and foremost, by using platforms like Tyke, you can invest small amounts. For example, on Tyke, you can invest as low as 5,000 rupees. That's one. Second, different platforms might have different types of startups listed on their platform. So first and foremost, you have to go and read this pitch deck. This is very, very important. If you're not reading this, you will not be able to follow along what is happening on the startup and you're just literally gambling with your money. Now, what is it that you should be reading on the pitch deck? So essentially speaking, I will point you towards 4 specific steps. One is the industry of interest to you. If you don't know anything about fintech or edtech, please don't go and start analyzing those ideas. You will miss a lot of critical details. For example, if you're working in IT and if you understand software design development and if you identify an investment opportunity in that space because you understand the industry, it might be sensible for you to invest in that idea. So literally don't get excited by the idea itself. First and foremost, understand whether you have the knowledge of that industry. If you don't, then please don't go and invest in that idea. Second, you need to be very clear as to how the company is going to make money. If this idea is not clear to you through pitch deck, please don't go and invest in such startups. Third, who the founders are. If they have the prior experience of working with startups or building past startups, or they have worked with good companies, they have a good network, or they have experience of raising funds, all these are good attributes that a good founder has. So that gives you a positive orientation to investing in those type of startups. So whenever I am investing as an angel investor, the number one thing that I would look for in a startup is that what the founders are like. Founders are smart, founders are passionate, driven, they have prior experience of the startup domain, then there is a higher likelihood that they will be able to build a successful startup. Now we can get into the discussion around that, but the video will become very long. But to cut the long story short, you're not essentially betting on an idea. You're betting on the founders and their network. Finally comes that what is the winning USP or the winning moat of the startup? Why is it that this startup is going to survive? Therefore, I generally tell people that if you are looking to invest in startups, please don't go and invest in the next Ola, Uber, Zomato, Oyo, this, that. Because those companies have already been built. If you're just simply trying to copy them and if you don't have a differentiating element, it is very difficult difficult to beat these companies, and that is not a winning recipe in majority of the cases. But if the product idea is very clear, it is very clear how the company is going to make money, founders are very smart, we are working on something which is super interesting, all these are winning attributes that you can consider in terms of making investments. Now, I will not essentially analyze Chintamani because that will give you an indication whether to invest in this or not, but I will just take you through some of the interesting points about this startup. So Chintamani is a financial freedom super app. So it's very clear what they are trying to do, that they are helping individuals spend, budget and invest, learn with the aim of achieving financial freedom. So the idea is very clear, no doubt about that. You can go and watch this video also and you will get better understanding. Now let us go through the pitch deck, right? That what problem they are trying to solve. Okay, so people invest money badly, they have no savings habit, etc, etc. So what is the solution they have proposed? That they are going to develop a super app that tracks literally everything, your UPI spending habit, saving habit, learning habit, and probably they will help you execute your investments also. So the idea is clear. This is not a verdict from my side whether to go invest or not. I'm just taking you through the pitch deck. So don't read too much about market traction, all this stuff, that in India there will be like 10 crore customer for our apps, this, that, because every company that writes a pitch deck, they include all these numbers that, hey, the market is like 1 crore and we'll capture 1% of it. So we'll have 1 lakh paying customer. That usually does not work out. So just ignore too much about the market noise. And that is where your industry understanding comes into the picture. That if you have worked in a certain space, you would know intuitively what the market is like. Then you just simply look at how the company is going to make money. So they have explained their business model. So since we are a B2C app, our primary revenue comes from commissions and freemium. Now, I'm not saying good or bad. I'm not analyzing this idea. I'm just simply telling you what areas to focus on this pitch deck. And finally, you should also take a look at the team, because that is the most important thing. And many a time, the pitch deck does not include the founder's name or does not include too much information about the founder. So you need to do more due diligence. So go on Google or LinkedIn and check about who the founder of Chintamani is. So here, if you go, you will see that Narhari Rao is the Chief Operating Officer of Chintamani. So go on LinkedIn, look at his profile, do more due diligence on the person, and then make your investment decisions. In the interest of full disclosure, I am not an investor in Chintamani, and I also do not know Narhari. He seems like a really nice person. I do not know him. I am just using publicly available information for teaching purpose. So I hope you understand how to do basic background work and research before taking an investment call on whether to invest in a startup or not. Now comes the third section, that what are some of the key things that you should be keeping in mind and whether or not you should be investing in my startup, because that is what the title of the video said. So in summary, you should be looking at number 1, do you understand the idea? Number 2, please only take bet on companies where you understand the business model, they have some kind of USP and the founding team is really good or the founder is really good and you consider them to have some kind of unique advantage. From that perspective, I'm building a range of startups right now. So luckily, I'm able to self-fund my startup. So I'm not looking for raising funds right now. Whatever startups I'm building, I'm putting my own money because I want to have control right off the bat as to how I want to shape up my startup so that I can pass on the maximum value add to consumers. But does this mean that I will never raise funding for my startup? I don't know. But you would definitely be the first people whom I would reach out to. I would reach out to the community who has been supporting me first in order to raise any type of money. But it would be a very interesting exercise for me to figure out if you would be investing in one of my startups that I've invested. So I'll put the links in the description box. It is called as Wisdom Hatch. Go check out the website. We are adding more stuff onto it. We are building it on LinkedIn also. So go search about it. Go search more about me and do the same analysis. I have not unfortunately created a pitch deck. You would not get to know more about my future growth plans, but definitely do more due diligence on me and tell me in the comment box whether you would be investing in my startup or not. And very soon, probably, I might raise funds for that startup. But I hope you enjoyed learning something new. Please give it a thumbs up and share it with your friends, and I will see you tomorrow.